The Fed has skipped rate hikes once again. We are back to discuss that, Jay Powell's presser, and everything else impacting the markets today on Money Never Sleeps. Welcome back, everybody. As we get going today, do us a favor, hit that like button. If you have not yet, subscribe to our channel. Nothing that Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kevin, to no one's surprise, the Fed did not raise rates this month. That was the expected outcome there. As I'm looking at some of the data today, the job market still very strong. Inflation still running high, and Powell still making it very clear that they will make any sort of restrictive policy moves as needed based on the data. Nonetheless, the markets are looking strong today. We have the stock markets, Dow Jones, NASDAQ, all bouncing today up between 0.75% and 1.5%. The dollar is making a little bit of a recovery. However, the VIX is down. We're seeing tech having a strong day today. Crypto is on the way up. Solana is absolutely ripping at this moment. What exactly are you focused on? What has your attention today?
Yeah, I mean, there's a couple of things that are definitely keeping my attention. I think the VIX is one that's been really interesting to me the past 2 days, how much that's been getting crushed compared to how much the S&P's kind of been going up. Like, it doesn't really necessarily make sense. So I'm keeping an eye on that. I'm also keeping an eye on, we got the manufacturing data from ISM this morning, and we got a huge contraction. That's, I think, something that's really telling of where we are in our market. We do know that whenever manufacturing starts to see contraction, and we're contracting pretty close to, prior recessionary levels, there's a good chance that we're going to start seeing it hit the services sector. So right now, I'm kind of keeping an eye on that. I think that's really important. We saw the same issues happen in Europe, Italy, Germany. They started seeing contraction in their manufacturing. Then now you're starting to see a lot of these European countries go into recession. Sweden is one of them that just recently went into recession, state for their economy. So that's a pretty good sign for the markets that we're in a bad place. However, today and yesterday and Monday don't seem to be going that way just yet.
Yeah, let's talk about some of the data real quick, and then we can get into the Fed and Jerome Powell. We saw private sector employment, job creation come in under expectation, although it was higher than last month. 130K jobs was the median forecast, came in at 113. On the to the high side was job openings. So that was 9.5 million last month. Expectation was 9.4 million this month. Came in 200K over at 9.6 million. And like you said, ISM manufacturing 46.7%. Expectation was 42.9. So a pretty big miss on that. Tomorrow we'll get some more jobs data, initial jobless claims, unit labor costs, things like that. And then Friday is going to be our non-farm payrolls, unemployment rate, and hourly wages. The growth in hourly wages expecting to be 0.3%. Unemployment rate supposed to be staying steady at 3.8. We'll see what that looks like. When it comes to wages, I do want to bring up, because we didn't talk about this yesterday, the UAW coming to an agreement and all of these labor unions getting big wins across the board. And that's great for workers. I love that. I love seeing big corporations having to pay their people more money and a fair wage, because I think for a long time we've just, people have been getting raked over the coals, and now they're starting to fight back, which is awesome. It is problematic for the Fed, though, because that is going to be higher wages, higher inflation. A lot of these companies are probably going to go ahead and kick that, at increased payroll down to consumers and just price up their goods and services even higher. So while it's great for workers, I think it's another thorn in the side of the Fed, who is already struggling to deal with this labor market and is still way above their inflation target.
Yeah, absolutely. I mean, I think the Fed, it's a really weird place for the Fed right now. I think that they're not doing anything necessarily, because if they do take action with another 25 basis point hike, there's a good chance that a lot of things could start to break, right? So I think that's part of the reason why they're kind of been holding off, even though they've said, there is possibly one more rate hike in the future. They haven't done anything yet. I mean, this is what, 2 meetings now where they've pretty much held, and we're anticipating a rate hike at some point by the end of the year. We're probably not going to get it now.
If I remember correctly, they've skipped 3 of the last 4. They skipped the last 2. I believe they did 25 basis points one before that, but then skipped the previous meeting.
Absolutely. Yeah. So, I mean, they were supposed to do one more. I don't know if we're going to get it. Doesn't seem that way. But I mean, it's kind of an easy thing for them to do, is just not raise rates right now because, okay, let's see if, anything gets better. Rates are extremely elevated right now. If we do take action, well, then we're kind of the ones to blame for when the system broke, right? But also if they, start cutting, then, well, inflation is going to start rising up. So they're in a really tight place. It's almost like they move 1 inch in either direction, they're going to be screwed in some degree. So I think that's right now the fact. Everything that he said seemed like he was very hawkish. However, I just don't understand why the markets are taking this as a good thing. But it's like they're hawkish, but they're unwilling to make any decision that's going to impact, the economy or the markets right now. It's like, yeah, it's kind of screwed. Everything's screwed, guys, but we're not going to take too much action here. We're just going to see how things play out.
I think a big part of that is also all of the the conflict in the Middle East and Ukraine, like just a lot of uncertainty about that combined with raising rates again, what that could do. So I think, man, Powell, he seems just so uncertain right now, and that is not a comfortable place to be. Like there were a couple questions where he had to really collect himself and compose himself, because you can tell that they really aren't sure what the right path forward is. And I don't think, let's be honest, no one truly knows what the perfect thing to do is, right? Like you can guess and we can prognosticate all we want, but at the end of the day, it's all a game of probabilities, and it's really tough right now because it's just a lot of variables outside of the Fed's control. So a few things that stuck out to me from Powell talking. Number one, there was that line of, we're not confident that we've reached a restrictive enough policy stance. And that was a line where the market started to go down. As soon as he said that, we saw, the Dow and the S&P. Crypto went down a little bit. It went, I was looking at ETH and Bitcoin, and they went down a little bit, but it was really TradFi that took a hit. Now they've fully recovered. NASDAQ is back up 250 points on the day. I'm going to look at the 30-minute chart here, and you can kind of see on it when I'm going to pull up a shorter time frame. I want to pull up the 5-minute chart. Yeah. Because you can see pretty much exactly when Powell said that line. And
it 10 for the S&P and stuff. Yeah.
Yeah, you can see when he said that line, it was right around 2:40 Eastern, and then you just see a quick drop. There's a back-to-back, red candle on this short time frame chart. But then ever since then, it started climbing back up, and now it's higher than when he started speaking. So it was really weird. I was like, okay, that was the line, because we were all waiting for him to say one thing that was gonna spook the markets, and that was it. And then the markets were like, nah, we're just gonna shrug this off and let's just go back up. So that didn't make a ton of sense to me, seeing it rebound the way it did. But nothing has really changed my strategy right here of I'm just gonna be patient. There's profits to be taken if you bought some of these things on the dips, which is awesome. I'm not telling anyone what to do. If I had bought, here's the thing, I didn't buy Solana at $10, so who am I to be giving anyone advice about anything? But I mean, listen, a 400% return in 1 year, that ain't half bad if you made that buy of Solana. And sitting here at 43.51, that's pretty great return right there. But like I said, I didn't make that buy, so I'm not really in a place to give people any advice there. I have taken some profit from ETH, which I bought at lower levels, and I'm feeling good about that because I'm very confident I'll be able to buy it in. I know Kevin thinks it's going into the 600s. If you're not quite as bearish, I don't think that it going into the 1400s is unreasonable. So I'll be happy to repurchase it there and make a gain, and not trying to time the bottom, but to each their own, however they want to handle this. But it's once again, the uncertainty that the Fed has doesn't instill a whole lot of confidence in me to redeploy capital into this market.
No, man, I think that they know it's game over. I'll be honest. I don't necessarily see a way how we can get back to the edge of the cliff. I think we're far over it right now. And it's just like that, what is it? Roadrunner and Wile E. Coyote moment where you're just looking around and you look down, it's like, oh shit. That's where we currently are. We're waiting for the bottom to fall from underneath us. And there's a lot of conflicting things in this market right now. And I'm not confident in a lot of things. I really am not. I'm not confident in this market one bit when it comes to the TradFi. Again, we're down roughly 10%, maybe a little bit less now that we've rallied for the past 3 days. But we kind of rallied into an FOMC meeting, right? We knew that there wasn't going to be a rate hike. I tweeted out last night, like, fuck it. I'll say it. I'll be the one asshole on Twitter that says 25 basis points. Let's do it, just in case, hedge your bets. But yeah, I mean, all honesty, we all knew that they weren't going to raise rates. We knew he was going to be hawkish. The market's already kind of priced that in, I think. Guys, I don't know if FOMC or any of this data really matters as much as it once did until, I don't know, something breaks. And I think we really do need a Lehman Brothers moment. I think that's the thing that's going to, maybe the markets taste a little bit of blood in their mouth. They kind of need a little hit to wake them up. It's like, hey, shit's not going well. I mean, we've been talking about Charles Schwab, and banking for the longest. They laid 2,000 employees off just like that. And, there's tons of unemployment. Unemployment's probably going to go up. We're seeing tons of layoffs. I mean, whether job openings are still strong or whatever, I think we're going to start to see unemployment rise. That's going to be bad for the economy because people aren't going to be spending nearly as much. They can't afford to spend as much money right now. Imagine when they don't have a job. And then on top of that, we have all these issues, globally. I mean, something in the Middle East breaks out and we have an issue when it comes to natural gas or fucking oil. I mean, that could just absolutely spike inflation once again. It's a really dangerous place in this market right now. I don't have any faith when it comes to anything in terms of what the Fed has to say, what economists are saying. I think it's broken. We haven't realized that it's broken. We're just waiting for that moment where it's like, oh, okay, yep, there it is.
There it is. All right. Anything else that you wanted to discuss around today's FOMC or anything else Jerome Powell said that got your attention?
No, man, that guy's like watching paint dry. I mean, let's put it this way: I don't hate him as much as some people do. I don't like him. Also, it's very boring just listening to the same speech over and over again. But yeah, he was hawkish. They didn't do anything. Game over, guys. That's all. That's all you kind of need to know.
All right, that's all you need to know. Anything else today? We have some earnings coming out this afternoon that we can recap tomorrow. We'll get Airbnb, Qualcomm, Toyota, blah blah blah. Nothing too intense there. Tomorrow is when we get Apple. That should be a very telling one. Why don't you? I'm going to pull up the earnings for AMD because I want to discuss that for a second. But why don't you dive into crypto? And I think we need to start with Solana, which is on a hell of a run. Got all the way up to 47, almost pretty much 47 on the nose, and then bounced off of that, retraced down to a little under 44. It's having a little run. ETH is at 1850 at the moment. That's doing pretty damn well also. But let's start with Solana.
Yeah, absolutely. I mean, you just pull this up on the Binance chart because I realized I was on the Mexi Global, and that doesn't necessarily help us when we look at this chart right now. But yeah, this is Solana. It has been an absolute ripper. I mean, one second, let me just see something real quick. All right, there we go. All right, yeah. So I mean, this is Solana. We're looking at it on the Binance chart just because Binance has the most volume, still the most transaction internationally. So we'll take a look at that. Let's pull up this parallel channel. We've been talking about this one for a long time. Here it is, right? It goes up, and this is how the parallel channel was fit prior to what we were doing, right? This is the way that it was trading in because we didn't break this until recently. I mean, if we want to be assholes, we could definitely do that and say, oh, it's still within it. No, let's just say that this is the parallel channel. We warned yesterday on the show that it could break above this and it could be a fake out. I wasn't anticipating it's going up to $47. Is it 47 to the penny? See.
It's like 46.98.
Okay, yeah. I was about to say that's a Binance thing. If it was $47 to the penny, it always happens to be that way. But yeah, I mean, it just shot up like crazy, right? And you can see that it broke this parallel channel. It's extremely overbought on the daily. The weekly, it's going to be, it's already extremely overbought. If we look at the monthly close was yesterday. It's in the overbought territory once again. And now everyone from the FTX collapse is absolutely in profit, slightly profit if they didn't sell at that point, or, they're able to break even. We talked about that yesterday as well. Solana is 100% in a really scary state, I think. I think a lot of people are FOMOing in here. I'm not necessarily thinking it's a good idea to short it because there's tons of open interest for this right now, and a lot of people seem to be buying spot. I don't know if that's distribution or if that's just, maybe this has got legs for another move up. I don't like the looks of crypto at all right now. This doesn't make a lot of sense, even when you look at some of the other alts in crypto right now. Let's pull up Bitcoin dominance real quick because I think that Solana is definitely stealing from it a little bit. You can see that Bitcoin dominance is at 53.44 right now. So it's definitely had a pretty good move down. We can see that it's oversold on the daily. If we pull up sol.d, probably, I haven't taken a look at this, but it's probably up. Yep, there it is. Look at that. So in the past few days, it's shot up roughly, let's say, what was the first day it started pumping? Like October 18th. I think that's when Binance started sending a bunch of USDT to the exchange. Yeah, but, I mean, it went up 75%. It currently is sitting around 63.61%. So Solana is definitely taking a bit of the market share from Bitcoin right now, which makes sense. And again, if we look at some of the other alts like BNB dominance, 2.72, it's down. If we look at XRP dominance, up a little bit here, 2.59%, but nothing crazy. So there's a few alts that are taken away from Bitcoin's dominance. I don't necessarily think that Bitcoin's move is done. I think that it's still kind of in this spot, but Solana right now is just stealing 100% all the spotlight from all of the crypto space.
All right. That's a hell of a run that Solana's been on. I want to briefly talk AMD. They reported earnings above expectations, but what really got the markets all hot and bothered was they brought up AI. And I mean, those two magic letters can still send a stock ripping. Discussing how they're expecting $2 billion in revenue next year from selling AI chips. That's a pretty big number for them. We've seen the stuff with NVIDIA where if the government wants to go after you and slow you down from selling AI chips to certain countries, that can definitely take a hit. We're also seeing NVIDIA pump today. They're being lifted up via the AMD news. So as much as I love seeing NVIDIA shares go up, I think it's a little early to get too excited there. So that's just kind of what I'm seeing with AMD, how I think the market's maybe overreacting a little bit. But hey, listen, things change quickly. What else on the crypto front do you want to talk about today?
Crypto, I mean, it's kind of boring, man. We're waiting for Bitcoin to make a move, right? So we can pull up Bitcoin one more time, and then we'll take a look at some of the major indices. And I want to take a look at NVIDIA as well, just because NVIDIA is really interesting.
I know. I already know what you're going to say about it. And it's going to hurt me, and I'm just kidding. We can, if you think it's important to talk about, we'll talk about it.
Yeah.
My
So I mean,
portfolio doesn't care about the facts.
we're kind of in a weird spot right now with crypto, with Bitcoin, right? We're in this, I think this is a wave 4 kind of triangle pattern. We're breaking above it. I honestly thought that we would have broke below it, but these things are unpredictable in these triangle patterns, especially when they're on the move up. So it's very possible that it doesn't need to go down to the 50, below the 50 moving average and shoot up. I mean, it could definitely dump out of this, test the 50 around 33.7, and then just bounce right out and push up a little bit higher. I think we're seeing a bit of that money from bleed into Solana too right now. So maybe that's what we're seeing. I still think that this is probably going to break up, but again, this is the only reason that is because the patterns, whenever the flagpole comes from below, it tends to break to the upside. If it was coming down here, then I would anticipate that it would break down as well. But this is the way of the trend, I think, for Bitcoin right now. You can see that we broke to, what was that, 35,213. That was yesterday. Or is this yesterday? Yeah, this is actually, no, this is today. This is a 4-hourly chart. My bad. Maybe that's why. Yeah, there we are. Yeah, but I mean, we're also extremely overbought. Can it stay overbought for a period of time? Most definitely. I mean, we've seen it back here. It stayed overbought in, middle of June. I think it's possible that we can stay overbought here and, push up just a little bit more. We're still seeing tons of USDT enter the exchanges, primarily Binance and Kraken, some on Bitfinex, but mostly Binance and Kraken. Tells me that they're either going to absorb some of the liquidity or they're going to pump it a little bit more, hopefully get some more volumes. So I think that there is still something nefarious about crypto. I think it's very possible that we do get that pump up To what range? No idea. And again, I say this because look at Solana, right? Solana's at 42.55. I didn't think it was going to go above 36, but here we are. Anything can happen when there's that many stable coins being circulated on these exchanges. It's just a dangerous place to be, honestly, to have any positions open in terms of perps, because it looks like they're liquidating people, whether I don't know what the purpose is. They're just making money because there's low volume. So hopefully they're going to try and drive volume into the exchanges by having these prices elevated for a period of time. But again, anything can happen where this thing just absolutely tanks. So I'm staying away from crypto. Bitcoin, it's going up probably. Let's see what else we have here. ETH is kind of in a weird spot. I think ETH's move is almost done. If not, it is already done. See this? See, I feel like this was the move, the height back here on October 26th. I feel like the fifth wave was finished, but we got another push up here. So maybe I did the wave count wrong, but I feel like there is a lot of exhaustion here. This is a pretty toppy place for a lot of crypto right now. I'm not going to say that it's the top because it could push up a little bit more, but things just don't seem as great as people would like them to be. I just don't buy into FOMO, especially at these levels right now. They've had a great run in October, but there is a bit of divergence between the traditional financial markets and crypto. And I do know that the players in crypto are very bad at the moment. So that's all I will say on that. Let's take a look at the dollar. Dollar had a pretty good move this morning, shot all the way up to 107.113. Weren't able to even touch the green line here, which is what we want. That's the resistance level we need to break. Went all the way up there, and now we got a hammer, an inverted hammer coming down. It's just FOMC days. Whenever we get CPI, PPI, FOMC, anytime Powell talks, markets are like, this means it's bullish for stocks. Let's fucking buy it. And then the dollar eats shit. And then guess what happens? Bank of Japan doesn't intervene. The dollar goes up. The euro falls because they're going into recession. The dollar goes up. It's really inverted how we look at the strength of the dollar against other assets. I mean, even if there's some type of, if the war escalates in any part of the world, the US dollar is probably going to go up. That's just the way it is. But, markets like to speculate, and when they speculate, they often get it wrong in the medium to long term. As we've seen here, people were extremely bullish back down here in July. Well, there we go. That's the dollar pretty much inverted. The stock market pretty much dropped 10% since then. We got to see how it plays out. But once again, these days, I'm not surprised by the dollar dropping here. S&P, very interesting. It's been shooting up like crazy. It's also been the reason why the VIX has been getting its ass kicked in. But we can see that we have a lot of resistance in this area. We got the 50 moving average and the 200 moving average. We're approaching that 42.50 level. We're at 42.41. Are we going to test it? Maybe. Could we push up a little bit higher? Sure. I think it's possible that we could, test the 200 EMA. If we break through that, then obviously we're going to come for the 50 moving average. I don't know if it's going to hold. I think there's a lot of resistance. We're also going to have to watch this stochastic RSI. Looks like it's, ramping up pretty fast. Today, I assume that it's going to close pretty quick. I mean, pretty high. We're at 29 minutes left in the market. We'll see how that closes out. The Dow got the death cross. It's a death cross rally. I'm not too concerned with that, even though it's up roughly, let's see, from the bottom, say from Monday's open to where we are currently, it's up 2.32%. But again, from where we were back in middle of October to where it bottomed, we were down 5.33%. So we're just kind of like halving this drop here. I wouldn't be surprised if we find some resistance fairly soon. And then the Nasdaq's just broke through the 200 EMA, broke through the key level. We closed below this on the monthly, which is really good because that shows you that this is pretty good resistance. On the daily, we're going to have these rallies from time to time. 50 moving average is there, so we're probably going to see if that works as resistance. Before we get to NVIDIA, I want to take a look at Apple because Apple is very similar to NVIDIA right now, or not NVIDIA, the NASDAQ. You can see that it broke through the 200 EMA. It's probably going to test the 50 moving average. And it's not, it's no coincidence that this is happening right before we're getting their earnings call tomorrow. I think between Apple and NVIDIA, these are the two that could definitely take down the NASDAQ significantly. Just bad earnings from one of them could absolutely just tank the market. NVIDIA, just because obviously that's been, everyone's favorite stock this entire year. And then Apple, it's got a, what is it, $1 trillion market cap or something like that? 2 trillion. What is it right now? $2.71 trillion market cap. So if they eat shit, then, everyone else is probably going to, have to wash their hands and get ready for dinner because it seems like this is the next move, right? We got the 50 and 200 right here.
Why would you need to wash your hands for dinner if you're going to be eating shit? I don't get come on, Kevin. Like
this, when we have guests, we have to tighten up. But yeah, right here, 50 and the 200 are right there, right? And sure, we're break through the 200 EMA, I wouldn't be surprised if this is pretty overbought in the next few days. Get rejection to 50. If we get bad earnings, then obviously that's going to tank below it. And then if we continue getting close below the 200 EMA, death cross for Apple, and then we're going to be in a very different market, in my opinion. Yeah, so let's look at the last one, NVIDIA, because this is the one that I would be most terrified of taking down the market, just because of, I mean, let's look at the market cap for NVIDIA right now. It currently is sitting at somewhere down here. I think it's, 1.045 trillion. So those are the $2 trillion market caps that we need to keep an eye on. But yeah, this is a massive head and shoulders. We see that we got a bit of a pump today. 50 moving average is coming down, so maybe we find some resistance on that. I think we're going to just be closing this gap between the 50 and 200. So we're going to try and get, somewhere between, I mean, obviously we're at 422. So I'll say this is the gap that we want to keep an eye on for NVIDIA. It's somewhere between here. It's about a 10% drop between 403 and 366. If we start closing that gap, then unfortunately that means that the 200 EMA is probably not going to hold, and that we're going to have to find some support. There's a massive $75 gap where a lot of people are definitely sitting with a lot of liquidity in that area. I wouldn't be surprised if they wipe people out in that direction. But yeah, I mean, I think this is this is the top of the market, in my opinion. I think that this is a head and shoulders pattern that marks, a bubble of AI that people got really excited about. Maybe they're getting a little bit excited about it again from the earnings call yesterday, but is it going to really save you at this point? We see that a lot of people have kind of given up on the AI narrative. I haven't heard it in too many earnings calls thus far, except for yesterday. I think that's, we're seeing this is contraction. This is the 50 and the 200 getting closer and closer to each other. If this price starts closing below the 200, then obviously, that's a death cross on, a $1 trillion market cap company. Probably won't be $1 trillion at that point. But yeah, this is the market that we're in right now. If it's rallying right now, I mean, obviously good for anyone who has positions and everything like that, but I don't buy this one bit. There's just too many levels of resistance, too many things that are, in our face that are just warning signs, like the dollar being, touching 107 today. I mean, gold pulled back a little bit too. So I think this is just maybe a bit of a rally going into what people are hoping is a good November, but I don't know, what it might be November pain. If you like Guns N' Roses heading forward, this just seems like we're setting ourselves up for disappointment. I don't know. I'm monotone, and I'm also saying stuff that I've been saying for three months. The market's dropped 10%, so we'll have to see how this plays out. But I'm not getting excited by any means. I feel like Jerome Powell right now.
Okay, I think that is where we're going to leave it for today. We'll be back tomorrow discussing the latest news, earnings, any other developments in the market, and then Friday for the big jobs report day. That should be a little bit more fun. Hopefully we have more to talk about. Markets a little bit more, I don't know, like
it's boring.
It's a weird place, man. It's a weird place. We're kind of moving on up. It doesn't make a lot of sense. This is when people can get themselves in trouble. But, we can't assume that the markets are going to act rationally. So just something to keep in mind there. Okay. Thank you very much for watching today. If you have not yet, hit that like button, subscribe to our channel, share us out on social media, drop some comments. Any of that good stuff is appreciated. We'll be back tomorrow at our regular time. Hope you have an awesome day. Stay safe in the markets, and we will see you tomorrow.
Take care, everyone.